reasons or advantages of refinancing a mortgage. Okay, so I have talked about refinancing on one of my videos, so you can actually check out that video on the process of refinancing and what refinancing is all about. You can check out the video. Okay, and I'm gonna be leaving the link to the video in the description. So today we're going to be talking about what are the advantages of you refinancing a mortgage. So the first advantage for you to actually refinance is going to be lowering your interest rate. So refinancing to lower your rates can reduce your monthly payment. So if you think your monthly payments are high, you're paying too much, when you actually purchase your house, the interest rates were pretty high, and you want to actually lower those interest rates, even if it's by 1%. It's gonna be a long run. It's gonna save you a lot of money at the long run. So you can even choose to actually do the refinancing. Okay, so if you want a lower interest rate, like I just said, yes, you can actually go in there to do a refinance. Okay, it will save you tons of money on interest over the life of the loan. Remember, a lot of people actually do a 15-year or a 30-year loan, so that's a lot of money to save. Okay, so just take for example, you are lowering your rates from, let's say, 6% to 4% on a 300,000 loan. Okay, you could save up to $200 per month. That's per month. So imagine you're doing that for 30 years and you're saving about $200 every month on interest. Okay, add it up for the whole year, then in 30 years you're gonna see how much you're gonna be able to save just by refinancing. So if you had high interest when you were actually originally purchasing your home, and interest rates have gone down and you want to take advantage, why not go ahead and do refinancing. Okay, but make sure that you don't go into refinancing if the interest rate is not the best, and check other terms that are going to qualify you to have a lower interest rate. Okay, just keep that in mind. Okay, so the second advantage or reason why you can actually refinance is lowering your monthly payments. So extending your loan term from maybe like 15 years to 30 years, depending if you actually had a 15-year. So if your original loan was for 15 years and you think that you're paying too much at the moment, or it's high and you can't afford it, you have other commitments and other things have changed, prices are increasing and every other thing, right? Life is getting a little more expensive. Even basic needs are getting more expensive. So maybe at the time you bought your home, you had actually gone in for a 15-year agreement to pay off, but over the course of the years things have been not going the way you didn't expect. Okay, things have become a little more expensive. You've had other things, maybe have additional mouths to feed and other things, loss of job, or everything put into consideration. Short story, your income is no longer able to cover the expensive or the high mortgage that you're supposed to be paying, and you think you want to refinance so you can have something lower than that. If I have to extend the loan for 30 years, it could give me free up some cash for me to be paying all that stuff. Why not go ahead? Okay, it can actually lower your monthly payment, so making it more affordable for you. Okay, so go ahead if that's the case for you. You think that is going to be a better option. Yeah, so that's another advantage that you can hold on to while you go to doing refinancing. The third reason is going to be short term or shorten your loan term. If you want to equally pay off faster, Remember, some people want to reduce their monthly payments, some people want to pay off their mortgage early. So on this other person's case, maybe they have more income coming in and they feel like it's better to pay off early than to keep paying low amount of money every month. Remember, when you switch from like a 30-year to a 15-year, your monthly payments are going to go up. Why? Because your interest rates are not going to be spread out for 30 years. They're going to be inside 15 years. So you're going to be paying way more than what you were already paying. So if you think you're making more money, your financial situation is better than before when you were buying the house, and you think, oh, I can do this in 15 years quicker than I would have in 30 years, why not go for it? If you want a shorter loan term, pay it off and forget about it, yes, you can actually go in there and do some refinancing and ask the lender to give you a loan, maybe from 30 to 15 years, so you pay off your loan quickly. Okay, and if you look into it, you will have an advantage of paying your loan early because you have to pay less interest overall. So whoever is having a shorter loan term, if the interest is not extending for so many years, you can actually pay off quicker and save on interest. So if you're thinking of saving on interest and you had a 30-year loan, yeah, you can actually go in there and refinance and get shorter loan term so you can pay and, like I said, save on it. Number 4 is going to be converting your home equity into cash, and that's known as cash out refinancing. Remember, I talked in one of my videos that there are different ways in which you can refinance, or there are different types of real refinancing. So cash out refinancing is just one of the ways you can actually refinance. Okay, so if you want to convert your home equity into cash, you have projects at hand and you do not have liquid cash, and you're looking for where to get money to actually get these projects done, and you have a home that you build equity on over the years, you can actually ask your lender if it's a possibility for you to get out some cash so you can get these projects handled and go into refinancing. Okay, so you can tap into your home equity, get cash from home improvements. You can, if you have some debt, you can do debt consolidation, pay off, and then you're just paying back debt in one bundle. You can equally tap into your equity in case you have medical expenses or emergencies that you really need to cover but you have nowhere else to go. Okay, so if you have a home and you find yourself in one of these situations and you feel like you have built equity over the years and you can actually go into it and get some cash to get things done, why not give it a try? Okay, it's another way you can actually get money and get some of your stuff sorted out. So typically, lenders will allow you to borrow up to 80% of your home value. So the higher your home value, the more money you're going to get. But remember, you're only going to get up to 80%. Okay, so if you have some high value houses at that moment and you have emergencies that you really need a huge amount of cash, as long as your house is worth it, you can get up to 80%. So you can give it a try and see if you can solve your problems. The number 5 advantage is going to be switching a loan to better terms. You know, sometimes when you go in there to actually get mortgage, at the first instance, you might not have terms that favor you all through. Okay, there might be some terms that are not what you actually want or what you're looking for. So if you think that during your first the original mortgage you didn't have the best terms, you can actually switch and go get a new mortgage by refinancing. Let's say you want to convert from an adjustable rate mortgage to a fixed rate mortgage. With an adjustable rate mortgage, right, your interest is never going to be the same. It keeps getting adjusted as time passes by. So if you are one that just want to know that, hey, I'm locked in for 30 years or 15 years on a 5% interest rate, no increase, no reduction, you actually can predict how much you can be paying a month. Okay, so if you think you want to just have that fixed interest and your original loan had an adjustable rate and you're like, oh, I'm done with this adjustment every time, why not go in there, ask the lender if you can actually get a fixed rate. If they can't give you, you can check, like I said, shop around. You can shop from somewhere else. Somebody might be willing to give you a fixed rate mortgage so you can predict your payments as time go on. Because hey, you don't want to sit and maybe after 5 years they change your interest rate from this to that, from that to this. You know, you cannot, because sometimes when you know that my interest rate is this, you can predict, oh, okay, normally taxes and insurance always change, that's for sure. Yes, so I can actually say, oh, okay, I'm just gonna know, I just know that the taxes and my insurance are gonna be the only things that are causing my mortgage to change. Because yeah, those are the two things that are gonna cause your mortgage to change, not to talk about your interest rate that is gonna go up and then you pay high interest on that, on your principal and all that. So keep that in mind. If you ever want to switch because you have adjustable rates, you can actually refinance. Another thing that can cause you to switch is if you have an FHA loan and you want to convert it to conventional. You want to remove the mortgage insurance on FHA. And FHA is another loan, another mortgage type. Okay, I have done a video on different mortgage types, so I can actually link that video to this. So if you've not watched it, you can actually watch it. I've talked about the different mortgage type, the FHA, the conventional, the USDA loans and the VA loans. It's all in one of my videos that I've made previously. So if you have an FHA and you want to actually take out your mortgage, remember, you only have, for FHA, if you have little down payments. For conventional, if you have anything less than 20%, you actually have a PMI. Okay, so this private mortgage insurance actually adds up into your monthly payment. So if you think that the monthly payments are high and you do not want to be paying PMI, you can switch it. You can equally just refinance in case on conventional loans. But like I said on one of my videos, when you have conventional loans, your PMI drops off after 22%. But if you have FHA loans, your PMI doesn't automatically drop off like that. No, it doesn't. So make sure that if you want to get rid of it, if you have an FHA, why not switch from FHA to conventional, so it can equally drop off. Or even if at that time you've not built a lot of equity, that can actually help drop off the PMI. After some time, if you end up having the conventional loan, it can actually drop off. Because guess what, if you calculate that insurance, let's just say it's $125 a month, because you pay it every time you pay your mortgage. So if you calculate that amount every year, and for FHAs, most likely they're not going to drop off. So calculate how much $125 every month is going to cost you for 30 years. Okay, and for conventional, I don't know how long you're going to take to get your your loan, your PMI drop, but until you get to 22%, let's say you only put down 3%, okay, and you're only paying the exact mortgage amount. You're not putting in, you're not adding even $1, $50, $10 to your mortgage. What do you think is going to happen? Nothing is going to be going towards your principal to help reduce your principal. So you're most likely going to pay that PMI for at least 5 to 10 years before you get rid of it. Okay, so if you can refinance that, you already have home equity that can help you reduce or get this thing dropped off. Isn't it gonna be a good thing? Yeah, you can. So go ahead and don't feel pressured, don't feel scared. Just ask what you need to do. Like you have to actually ask questions when you go to do refinancing, so don't be scared of asking, if I do this, is this gonna work? What is gonna be my monthly payment if the PMI is gonna be taken off? Okay, so the number 6 advantage is gonna be removing a co-borrower. So refinancing allows you to remove an ex-spouse or a co-signer from the mortgage. If you're in a process of divorce, you can actually refinance in case you want to keep the house, you don't want to sell the house with your partner and you guys share the proceeds. If you really want to keep the house and your partner doesn't want to keep the house, you can refinance. Some people are nice enough. Some people might choose to actually let you assume the loan, but if they don't want to, they want their equity from the house, my dear, you just go ahead and refinance and then let them have their equity. Or you guys don't even want to worry about if you choose, you want to take the house but your other spouse name was on it and you're trying to remove their names or remove them from the mortgage, yes, you can actually refinance, so you'll be the sole owner and they are no longer part of that mortgage. So you actually have to go through the process of refinancing just so that your ex-spouse, or maybe some people might still be married but the guy is no longer, or the woman is no longer interested in staying in that house. Maybe they have a different vision from yours, you know, then they have other things they want to focus on and just don't want the house under their name and stuff like that. So it's a way for you to actually remove somebody from being a part of that property. Okay, so the number 7 is, like I said, if you want to get rid of PMI, if you want to get rid of private mortgage insurance, if your home value has increased and you now have at least 20% equity, and this is mostly for conventional. Okay, this is mostly for those who have conventional loans. So for when you get to 22, it will drop off automatically. But if you have up to 20% equity and you think you want to get your private mortgage insurance out, you can refinance into a loan and it does not require PMI, so it saves you money. But this is my take on this. It's gonna save you money for just a period of time. Okay, remember that there are options in which you can pay your PMI if it's a conventional loan. This is for conventional loans we're talking about. If you have a conventional loan, you can pay more toward your principal if you do not put up to 20%. Additional payments that you make over your monthly payments go towards your principal, so it helps actually bring down what is on the principal. because of course it's not all the money that you pay goes toward the principal. A very little fraction of it goes toward the principal, because when you make those payments, money goes to the toward taxes. The money you see on your in your escrow, it goes toward taxes, it goes toward your home insurance, and very little will go toward your principal. Okay, so for you to offset how long you're gonna take for PMI to get dropped off, you can make additional payments, because you're refinancing, you're starting a whole brand new loan. Your refinancing might be for another 30 years. If you're not refinancing for a shorter time, you're gonna surely refinance for another 30 years. So would you want to go to do the 30 years whole year? Yeah, it's gonna save you the PMI, but you're gonna take another 30 years for the new loan. So for conventional, my take is pay more, even though it's gonna help, but I mean, it's an advantage, but you want to pay higher than what is expected, so your PMI can drop when it's 22%. And it depends on the banks or the lenders in which you actually have this mortgage with. Some of them, they have those they have inbuilt systems where you can actually calculate how much you can pay towards to get your PMI off. So let's say you have PMI for a conventional loan, and you go in there to their website or their system and you type in, it will tell you how much you're paying toward PMI actually. So you go now, you say, okay, let's just say every month you're paying $130, and you have an estimate of when you want to take off your PMI. Let's just say you say, I want my PMI to be taken off in 2 years, okay? Because you can actually do that. You want your PMI to be taken off in 2 years. You can go in there and then you put in you put in the date in which you want the PMI to fall off, and then it will show you how much you can pay every month, so that pay extra every month, so that that PMI can fall off. But if you know you don't have the money at that time, is it a good option for you to actually refinance? Yes, because it's gonna drop off the money, the $130. Imagine if you were paying $1,500 every month and $130 is only for PMI. It's gonna be less than $1,500. That's $130 off your normal monthly payment, which is gonna help you. You can use that for other bills, okay? But like I said, that I was just talking on conventional loans. If you have FHA loans, please do go get your refinance, because it's not gonna fall off anytime soon. Go get your refinance so you can get rid of the mortgage insurance on it if you want some. And the last one for the day or for this video is gonna be improving your financial flexibility. So if you want to improve your financial flexibility, you can actually opt to go refinance, okay? Lowering payments or pulling out equity can free up cash for other investments. If you have other investments you want to invest in and you don't have cash, you can actually check on how to go about or with a refinancing, so you can actually pull out cash, or you can use it for retirement saving. Yeah, you can use it for retirement savings or other financial goals. So if you have projects and you feel like refinancing is the best option for you to have this money, and you want to improve your financial flexibility, because guess what, if you have cash you can do more investment than you think. So if you think that that's a way out, or that's the best option for you at that moment, why not go ahead and actually free up some cash, okay? Don't wait and just because you don't want to take the refinancing and you're unable to do other investments. So don't wait for that long, okay? So yeah, this brings us to the end of this video on advantages or reasons why people should actually go ahead and do some refinancing on their existing mortgage. Remember, my videos are for educational purposes only. Do your own research out there. There are so many amazing books you can read. I'm actually writing a book on stuff on the simplified home guide, so I'm gonna actually be publishing that book soon, so stay tuned on that. So read books out there, okay, and make your own informed judgments before you actually go out there and start the refinancing process. Please don't forget to like my video, share it, comment, and turn on your notification bell, okay? Subscribe, please subscribe. So thank you for watching to the end. Please stay safe and healthy out there. Until next time.